Morning, Steve Ray in Chicago with the morning grain comments. Markets are mixed with the beans, meal, and oil lower. Corn about unchanged to maybe a penny lower, while wheat's anywhere from a penny lower in Minneapolis to 2 cents higher in Kansas City. Outside markets, stock markets trading mixed. We've got right now the dollar rallying from earlier lows, and crude is down about $1 at 75.71. Gold's also a little bit lower. As expected, the U.S. President announced tapping 50 million gallons of crude oil out of the strategic reserves. This is higher than what Obama did under the Libya tension, and also what George Bush did in 9/11. So it's a little bit higher than what people think. So it's only 8% of our production, and so we'll see if people who have sold the rumor maybe come in and buy the fact. We're still worried about increased coronavirus issues in Europe, also unrest because of some countries saying people have to get vaccinated. We also see increases here in the U.S. of cases, but not as severe as far as hospitalization and deaths as the first outbreak. So we'll be watching to see how the economy reacts. The Fed has a challenge on whether to go after inflation or keep accommodating if the economy slows. Certainly, certain things like fuel and food have seen big inflationary jumps. As far as weather is concerned, U.S. is dry. Eastern Australia is wet. There's going to be some showers in Europe and the Black Sea. Showers continue in Argentina. Long-range maps are, though, a little drier. 95% of the U.S. corn and soybean crop is harvested, so this dry weather, even though it's cold, should allow for the completion of the harvest. We also note that Matif canola and Canada canola prices continue to trade higher. There is talk about a lower Canada canola crop and lower exports. We also note that the Matif corn prices that are all-time highs, and Matif wheat and the Black Sea wheat prices are also at all-time highs. So I think the wheat market is the one that's supported the most right now. USDA estimated the winter wheat crop at 44% good excellent. That's down from 46 last week, and we do look for a dry spring across the U.S. Southern Plains. So higher Russian prices, with January trading at a premium of $373 a ton, which equates to a $120 export tax, and higher European wheat prices continues to offer support in the wheat market. Corn, we're seeing competition for U.S. corn exports out of both Ukraine and Argentina. That might limit the upside in prices, although down the road we think that funds continue to add to their long positions because of lower 2022 supplies. Beans, watching South American weather, also China demand. China has coverage now through December. Brazil might have some beans available in January, which kind of limits the upside in our export demand, but crush margins are still very positive and support the market. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.